to inform you about the amazing thing that is on the market that you may not know of. And which market is that? The crypto market. All right. What is it that I want to tell you? Well, I'm going to save you the long wait here. Hello, kitten. Yes. Um, so you don't have to watch the whole video if you don't want to. You can skip right to the end or skip to the next video after I tell you this one thing. This video is about something that's bigger than Bitcoin on the crypto market that you may not know, especially if you didn't look at the information on what happened in the markets in the last, 12 hours, 15 hours, something like that. What is it I'm talking about? Well, drop the details. There we go. The bounce on Solana is bigger than the bounce on Bitcoin, percentage-wise. And yes, that does happen on a lot of cryptos. And that is why many people trade altcoins, right? So, for example, yesterday, Bitcoin from the very low of the day, relatively early on in the day, saw a move up of more than 5% from the end of the wick to the end of the wick, yeah? From wick to wick, right? It wasn't a 5% move in terms of the daily candle, but if you look at low time frame trades, people who caught the absolute bottom and didn't do anything else but ride it to the top and got out would have made more than 5%. Now, did most people do that? Obviously not. But did some people do that? Well, statistically, there's a probability some did. Did I do that? No, I was sleeping for part of that time. And I don't trade in my sleep because I think that's insane. Right? What did Solana do in the same period? Solana, from its bottom to its top yesterday, had basically like a 10%, more than 9% move. I think it was like 9.7, something like that, percent move. From the very bottom of the low wick to the very top of the high wick. Right? Now, again, was that a 9.7% move or 10% move on the daily candle? No. And not in terms of the body of the candle, no. But in terms of the actual candle itself, from the wick to top of the wick, from the bottom of the side of the wick to the top of the top side wick. Yeah, it was 9.7% range or 10% range, depending on what exchange you're using. Yeah, it was. Again, did anybody catch that entire move? Yeah, probably somebody did. And when you realize, yeah, of course, well, man, I could have 10x that and I would have doubled my money in a day. Yeah, you could. Or, this is the great or, A, you could use no leverage if you don't need to use leverage. Right? And with a coin like Solana, there's really hardly ever a reason to use leverage, given that it typically has 3, 4, 5% days. Like, it's normal, right? It's very volatile because there's a lot of movement in the standard deviation of returns on Solana. Why? Well, because it's a very volatile crypto asset, right? Is it as liquid as Bitcoin? Obviously not. Bitcoin's the top dog, the most liquid asset in the crypto market. Ethereum number 2. But Solana's not far behind, relatively. And, I don't care if people like it or not. I don't care if you like the technology or not, or if you appreciate what people are building on it or not. It's not the point. The point is that there's some sick gains to be made on a coin that typically moves 3 to 5% in a day. Like, typically. Even 1 to 2% is great, but like typically it moves 3, 4, 5% in a day. And very often 7, 8, 9%. Often even, often enough, even when, 10% or more. But it's normal to see a range of 3 to 5% on Solana in a day. It doesn't matter if it's going up or down, right? It matters that it moves. Because as long as it's moving, if you're trading, in theory, as long as you're trading it correctly, then you can make money on it whether it's going up or down. And I'm not talking about long-term investing here. You want to be a long-term investor, use the long-term investment approach. That's one thing. You want to trade, that's another thing. Is trading gambling if you're not using the right information? Sure. Is investing gambling if you're not using the right information? Sure. Right? And people say, well, I prefer investing because I can more easily run a long distance race than I can run a sprint. Okay, to each his own. But so not everybody has the runway of time available to them. Right? Some people want or need to get certain actions done quicker. And for that, there's trading. But it doesn't mean you have to stack up on leverage into a situation where if it moves a quarter point against you, you got wrecked. And how do we know that happens? We know that happens because yesterday, for example, literally during our live stream, right, when the price moved like on a 15-minute candle, like 0.18%, and we saw like 10 million more dollars, or even maybe 100 million, whatever it was, a significant amount of change was added to the liquidation. In a 15-minute candle, it happens all the time, like constantly. Just look at CoinGlass, look at the liquidations chart. It's constantly people getting liquidated. And they're getting liquidated for like $2-3 grand a piece. Hi, hello. I see a message from, hey, Juliana. Good to see you. So, there's people getting liquidated for $2-3 grand a piece, and then you'll see like the outlier. They'll show you the biggest account that got liquidated, and it's usually anywhere from like $2 to $20 million, right? Somewhere in that range. Like $2 million on ETH or on Bitcoin or whatever, or 20 million or 18 or 8 million or 10 million, whatever. It's always millions of dollars somebody lost. You know what? The exchanges are like, yay, somebody lost a lot, so we made a lot now. Because they're usually the ones counter trading those positions anyway. In most cases. Not always, but most cases. Why? Well, because exchanges trade against you in crypto, if you don't know that. And either the exchange does, or they sell that information to whales that do. What information? Well, they sell leading information to them. So in addition to the VEPS information, they give them order flow information at a level that you don't get it. Right? They get to see what's on the books before you do. How's that help? Well, if they know what orders are coming on the books, if they know there's more buys than sells, about to be executed, they know which way the asset's likely to move because it's about buy pressure and sell pressure. Right? If there's more buy pressure, price goes up. If there's more sell pressure, price goes down. Right? That buy pressure and that sell pressure, again, is created by people, who are trading essentially the standard deviation of returns or the Laplace distribution of returns. But it's most typically the distributions of the returns that they're using. Right? That's why volatility in trading is the standard deviation of returns, right? Or the Laplace distribution of returns. Either one, by the way. But typically, and especially when you're learning, we refer to it as the standard deviation of returns, right? One standard deviation of returns encompasses 68.2% of the probabilities that the price action will close within that one standard deviation of returns. Two standard deviation of returns includes the probability that price action will close, within that 95.5% probability that price action will close within the two standard deviations of returns. Three standard deviation of returns means 99.7% probability that the price action will close within that third standard deviation, at 99.7 probability. Right? And it's from the upside to the downside, right? In all cases. That's why it has that bell-shaped curve, look to it. Anyway, why do I mention all this to you? I mention this to you because, I notice a lot of people complaining about, market's not doing much. It's just sitting here. It's boring. And they show you all these graphs, silly charts, silly lines. Oh, look, back then it did this for 6 months, and the time before that it did it for 4.5 months. Like, who cares? Oh, look, we had a cycle that went 400 days before we hit the peak here, and then we had 600 days before we hit the peak on that one. But now we're only at like whatever it is, 200 days. Dudes, you got to stop thinking that way. If you're thinking that way, you're thinking about it wrong. Here's why. If you're a trader and you're thinking about hundreds of days into the future, like seriously impacting your trades, you're doing it wrong. If you're an investor and you're thinking about when are things going to get spicy and how many hundreds of days do I have left, you're probably also doing it wrong. Because unless your investment term is ending within the next year or two, hundreds of days is probably a very short time frame for you. Right? It's not a long time when you're investing for the long term. People who are investing for the long term are typically investing at a minimum 3 to 5 years. At a minimum. And 3 years is a very short time. 5 years is like the very basic. Right? When people really talk about investing, they're talking about holding assets for a decade, 2 decades. Usually decades is the norm. 3, 4, 5, 6, 7 decades. They want to hand it off to their children, even, right? They don't want to just invest in something that they're going to sell next week or next year, right? Or in 5 years. They want to hold something that they can hold that's just going to keep growing throughout their life, that they can hand to their heirs, who can then decide what to do with it and hopefully just hold on to something that keeps growing. Are there many companies that survive 100 years, 200 years? There are actually a bunch. How can you get in on one of those early? Do your research. Who knew that Coca-Cola would be a smash hit and last more than 100 years and keep growing? Who knew that, a lot of companies, Ford, right, will keep growing for so many years. It's about being smart when you're doing your research, knowing what to invest in, knowing what the future is likely to be, right? Is the future likely to be more horse and buggies or cars, automobiles? People who went with automobiles were right 100 years ago. Now is the future more likely to be more gas cars or more electric cars? Well, at the moment, it appears to be gas cars are very strong, but electric cars are definitely disrupting the market. So what do you think you should be investing in as an investor if you're into the automotive industry? Like, should you be investing in gas-based cars or should you be investing in electric-based cars? My guess is you want to be investing in the future technology, not the past technology, right? Why? Well, because the future technology is where the future returns are at. The future technology is where the longer-term prospect of investing is at. If you're investing in things that have a bright and promising future, then you are more likely to see positive returns. That's all I'm saying about that is don't get stuck on the past just because it might sound nice. Oh, wow. Invest in this company. They've made money for 75 years, 100 years. They'll do for another 100. See, it does increase the probability that they will. Why? And then it was 1971, as we all know, depegged again from paper gold and turned into fiat completely. So arguably, the dollar should survive another 100 years. Right? Dollars. So it's not the same dollar. It's a different asset. What happened to that asset? Well, it survived from 1913 until 1971 as a paper pegged, sorry, before 1913, right, it was a gold pegged dollar. And then from 1913 until 1971, it was a paper pegged dollar, right? From 1970 until now, 53 years later, it's been a fiat pegged dollar. But does that mean it's going to survive another 50 years? It does not have to. People say, well, the Americans have nukes. They can, they have the most nukes in the world, therefore they're the biggest army, therefore they'll win. Just because America has the biggest nukes, or most amount of nukes, does not mean that the dollar will outlast everything. Let me remind you that it was actually the Soviet Union, right, the USSR, that had the most amount of nukes, more than America. Still technically does. You can say, well, they don't have as many, or they're not as high quality, whatever that means. They can't, they're not as reliable as the American ones. They don't fund their military as well. Okay, maybe they don't fund their military as well, but they still had the most nukes. So that gets rid of the argument of the biggest nuke arsenal wins, because that's just not true. Right? The ones that are the winners are the ones who have the best prospects for the future that people want to live in, and that make every effort to live in that future. So typically that will be something to do with economics. Who has the best economic promise for any particular people? Because that's really what it comes down to. It doesn't come down to who's got the biggest weapons or whatever. Nobody cares about that. Yeah, some people care about it. Military people or politicians or people who are into that stuff and think that somehow that's more important, than other things happening in the world. I know you can make the argument, I get it, you can make the argument that people with bigger arsenals have more at stake because they're more likely to be targets and they're more likely to be involved in conflict. Therefore, they're more likely to be able to flex their muscle even if they don't have to use their arsenal. Therefore, they're more likely to be significant powers and all that stuff. Okay. You don't need to actually be. We've seen that time and again. We're seeing it right now in the world, unfortunately, in some cases, and fortunately in others. Ukraine, for example. I mean, at least in terms of great military traditional standards, if you look at what the Russians have been doing in Ukraine for more than 2.5 years or so, they don't, because I don't like Putin. And I don't blame Russians for doing this war. It's Putin, obviously. But, but is it possible Putin could win by grinding this out? Yeah, if the West stops supporting Ukraine. Is it possible that Russia is really going to have an outright victory if the West stops? It's possible, but it isn't guaranteed. Why? Well, because while the Russians have an incredibly powerful army, compared to most armies on Earth, we've seen how easily it can get chopped to bits in specific battles or missions or operations by a much smaller, more improvisational, more nimble, more agile Ukrainian army. Right? The Ukrainians are more inventive because they have to be, especially at the beginning of the war when they're doing tons of crazy inventions with things they were doing with drones, because they didn't have a choice. So they invented all kinds of battle configurations for drones, combat-ready configurations for drones that didn't really exist before, or that weren't popular before, because they were thought of as amateurish and they just wouldn't work. Well, they proved everybody wrong, right? They figured out how to hook up like literally hobby drones with like attached to them that they would then drop on the top of a Russian tank that didn't have a cage on it or something. And they would take out that tank, or they'd drop them into trenches with soldiers in them and take out those soldiers. It's all very grim and miserable, but my point is, right, that the Ukrainians figured out how to improvise and therefore not just survive, but thrive in the field of war. When everybody else in the world said, no, the Ukrainians are going to last even a month. Russia's going to trounce them. It's going to walk all over Kyiv in a few days. It didn't happen, did it? The Russians did not march over Kyiv. Right? They barely got into Ukraine. The closer they got, the harder they fought against the Russians who kept crushing them. Now, are there places that the Russians got their butts whooped? Sure. I mean, that the Ukrainians got their butts whooped? Absolutely. You know, Mariupol. It's very sad. And the Ukrainians fought, you know, apparently very courageously for as long as they could, but they lost, right? And they lost a bunch of territory. Why do I mention this? Again, it's not to talk about the war specifically. It's to mention the fact that a smaller, more improvisational force with far fewer resources, even with all the help they're getting from the West, far fewer manpower, like 10-to-1 ratio or something crazy, managed to hold off against a far more superior force on paper. Like, Putin never thought he'd have to be fighting to take Ukraine 2.5 years into the battle. He thought this would be over in a weekend. I mean, he literally thought it would be over within 3 days. Like, absolutely, genuinely, literally thought that. Well, 2.5 years later, it certainly hasn't been 3 days. I think we can all agree that he did not do what he wanted to do. So what does that mean? That means that underdogs can win. It's one of the great stories of American culture is the underdog winning. It's one of the reasons people love American culture is because it's so popular in American culture that the underdogs win. David versus Goliath. It's one of the reasons that story is so popular since thousands of years. So is Solana the Goliath to Bitcoin's David? I'm not saying that. But is the US dollar the Goliath to Bitcoin's David? Kind of, you know, there's certainly that line of thinking. Right? Is the euro, is the British pound the Goliath? Are they all the fiat currency system? Is the fiat system the Goliath to the crypto system, the blockchain system? Brothet. M. Yassin Marsak. Hello, M. Yassin Marsak. Nice to see you. Yeah. I don't know what Bitcoin Brothet means, but yeah. All right. So is Bitcoin the David to the Goliath's fiat? Or to fiat's Goliath? To me, it seems obvious. But is Solana an asset worth trading if you're trading crypto? I mean, the way I see it, if you're trading crypto and you're ignoring an asset that's doing 3 to 5% on a typical day. And yesterday, again, from bottom to top, you know, what was that move? I'll get you the exact number now that I'm in front of this machine again. From bottom to top on this chart, 9.84% on the old crypto index chart. So obviously it would vary from one exchange to another, but 9.84% in one day. You know, here, can I show you this? Will this work? Oh, there you go. Look at that. From that low down at 122.80, where it reached yesterday, or 122, 122.77, where it hit a normal distribution line, by the way. Notice that. Normal distribution right there, a 4-hour normal distribution in the first candle of the day. Literally went right to it, to the penny. 122.73, 75. Then went all the way up to 134 and 85 cents. So, where is that number? 122.71 up to the high of the day, 134.90. I mean, you know, I don't know what to tell you. If you think that it's not worth trading that just because it's volatile, then you're missing the point. If you think it's not worth trading that, again, just because you don't like the meme projects you've seen on it, or the whatever, you know, Web3 projects you've seen launched on it, or because it's created by a bunch of venture capitalists, again, I don't know what to tell you. Like, don't trade it. But if you're looking for solid returns on a liquid asset, there's tons of these coins. And I'm not telling you to trade Solana. I'm just talking about how this altcoin is one of many that has far greater returns on a daily basis. So even if you're looking to stack Bitcoin, right? You trade Solana and you take your profits in Bitcoin at the end of the day. You convert your Solana into Bitcoin, or you convert your dollars, USDT or USDC or whatever dollar stable coin you use to trade your Bitcoin with, whatever profits you took it with. If you took it in dollars, just buy Solana with those profits. You could, of course, trade Solana BTC, but that's a whole different animal, but you could still do it. I'm just saying, if you want to be like a simple-minded trader, either trade Solana directly or something like it that is equally or better volatile and has decent enough liquidity that you could trade. And if you want to just stack Bitcoin, then you stack Bitcoin at the end of the day when you take your profits, right? Whatever your formula is for how much you stack versus how much you keep in fiat in your wallet and stack that way, whatever. Everybody has their own choice. And I'm not going to tell you what to stack and how. That's your business. I'm just pointing out that Solana is a great asset to trade. And I'm saying that as somebody who really likes Litecoin. I don't know if I've mentioned this to you enough, people of the internet, but I really, really, really like Litecoin. Why do I like Litecoin so much? If you don't know, right, Litecoin is basically like the kid brother of Bitcoin. It has effectively only 4 times as many coins in the max cap as Bitcoin can have. What does that mean? That means that if there's 21 million max cap of Bitcoin, there can only be 84 million Litecoin ever. That's not a lot. If you think Bitcoin is rare, then something that's only 4 times less rare also pretty damn rare. Everyone calls Bitcoin the rarest asset on earth. Well, that makes Litecoin a close second with just 4 times as many coins. And with a price of, like, what is it, like 1.25%? And what's the LTC BTC price right now? I think it's like 0.0125 or something. Let's double check. This I want to see. What's my updated? I rarely look at that pair. I look at the LTC USD pair a lot, but I don't often compare the, or not enough, not like every 5 minutes. Here. Litecoin, Bitcoin. Well, let's just look at the old. Yeah, 0.001137. I mean, do you realize how cheap that is, right? 0.001137. We're talking about an asset that has the exact same software core as Bitcoin, and whose miners, many of whom are Bitcoin miners, mine both Bitcoin and Litecoin, among other things. But Litecoin was usually one of the first other coins they would mine, if not first altcoin. And you could say, well, it's used. I don't know where I got caught up, but people can say, oh, but Litecoin isn't so useful. All it does is serve as a test net for Bitcoin. I would say that's an incredibly valuable use case. Its purpose is to demonstrate that Bitcoin's code is sound. Litecoin's case is to prove that Bitcoin is sound money from a coding perspective. So whatever happens on Bitcoin happened on Litecoin first, in terms of rollouts and things like that. And there's 4 times as many transactions per second. The mining is 4x that of Bitcoin. Right? So the initial 4-year period of Litecoin was 200 Litecoin per block, not 50. The second period was 100 as opposed to 25, and so on and so forth. So why is Litecoin valuable, and why is it undervalued, in my opinion? Again, it has all the same protocols of Bitcoin. It's divisible, just like Bitcoin. It's uncensorable, just like Bitcoin. It's peer-to-peer, just like Bitcoin. It's immutable, just like Bitcoin. It's updatable, just like Bitcoin. I mean, you can update the ledger with new transactions, right? It's portable and mobile, I already said. It's got all the same inherent benefits as Bitcoin. The only difference is not as many people run Litecoin nodes or have Litecoin in their wallets. That's the only difference. Oh, it's cheaper than Bitcoin. I don't want it. Why don't you want it? What kind of moves yesterday Bitcoin did? From the bottom to the top, 4.94%. 4.94% on the LTC BTC pair. LTC BTC, not even LTC USD. Let's look at LTC USD. LTC USD. Let's look at it on Coinbase. Why not? A popular exchange, which yesterday announced it, or recently announced that it has successfully completed a transaction between 2 AIs trading an AI token. Isn't that something? Yesterday, from the bottom of the bottom wick to the top of the highest wick on the day, not talking about today's wick, but on today's wick, yesterday's wick, 6.68%. That's more volatility than you got out of Bitcoin yesterday. And if you go up to the top of today's wick, already 7.9%. Now, what about Bitcoin? Let's just, be fair. Do the do. Yesterday's low, around 55,697. Call it 55.7. It's fine with me. Up to the high of the day, around 658.459, 4.96%, which is not shabby. That's very respectable numbers. That is amazing volatility, but it's not 6%, 7%, 9%, 9.8%. And it shouldn't be. It's more liquid. It's more mature. Only by a couple of years or by a number of years against Solana, but it's not that much more mature than Solana. I mean, Bitcoin's only 15 years old in terms of trading. So again, I'm not here to, break your ears and tell you to, you got to buy this. This market's bigger than Bitcoin. No, the market of Solana is obviously not bigger than Bitcoin. Not yet, anyway. Could it be one day? Maybe. Things can change. But at the moment, Bitcoin is the gorilla. And that means that the alts have more volatility on less liquidity. Which means, all right, unless you're trading hundreds of millions of dollars, if you're a retail trader and you're trading altcoins, trading things like Solana or Litecoin or whatever, even BNB, I mean, I don't care. I'm not partial to any of these things. I really am not. I like Litecoin for many reasons I just explained, but, because it's rare, all right? And it has the same elements as Bitcoin, and it's super undervalued in my opinion. Think about what is going to happen to Litecoin when people realize, damn, I can't buy Bitcoin anymore. Satoshis are too expensive. Right? Yeah, I can get a few Satoshis for a few bucks or whatever. I can get, I can still get 500 Satoshis for $1. Dude, you can get a whole Litecoin for like $65 right now. Even if it goes up double in price, $125 gets you the same software code as Bitcoin, the same scalability, divisibility, and all that other stuff as Bitcoin. And it's faster than Bitcoin, transactions per second wise. People are going to realize this is better than silver to gold. When are they going to realize it? I don't know, and I don't care. Maybe they never will. But I think there's an extremely high probability that people will see it as extremely advantageous to own Litecoin, even if they don't touch it for 20 years, right? Just to have some, the same way people own silver. They're going to see, it makes sense to own something that's basically identical to Bitcoin and has been the testbed for Bitcoin for many years. It's not just like a fork that then went and did it. I love the marvel of Litecoin, but this video is not just about one coin in particular. It's about the idea that you can trade alts and get significant returns on those alts that are more significant than Bitcoin. Does it hold those things longer term? No. I'm talking about individual days where you trade and you stack, and then you stack Satoshis with those wins. If you trade these alts and you take your profits and you hold Bitcoin, then you convert your wins into Satoshis or Bitcoins or whatever, however big your wins are. That's all I'm saying. You want to stack and rack Satoshis or Bitcoins? Use alts. They're your friend. Right? That's kind of what they're for. There's a reason that prices on alts, by the way, will go up to a certain height, and you'll see a lot of dumping out all of a sudden because of the volatility. Well, guess what? That volatility is created by a lot. People are selling their alts to do what? To stack Satoshis. So, bear that in mind. I think I'm going to leave it there for now. I don't want to. I've been going on this now for a while, so I'm just going to leave it at that. And I'm going to remind you again that if you want to learn how to trade, just go to the Alpha Trading Discord. It's at alphatradinghq.com. alpha.com/discord. That domain name again, or that URL again, is alphatradinghq.com/discord. When you go into the channel, you click on the button that says create a ticket. You put the probabilities that we like to mark, and then they like to test us and see if if our probability reads are good, and they usually are, because we're reading the VEPs. We don't have to make it up. If you tune in and you're in the Discord, you can get, like I said, the free access to those tools. You get the free educational information. You get the free access to the chat with the people who are actually using the VEPs every day. Anyway, that's going to do it for now. Hope to see you guys in the Discord and in the live stream. Today's live stream should start as usual at 9 a.m. U.S. Eastern Time. Until then, happy trading and, good times.